Tesla has experienced both rising and sliding trends, just like any other stock. Following a nearly 50% increase in 2021 and a staggering 743% the year before, the automaker's stock fell 45% in 2022. Due to a number of unrelated variables that have tested the company's performance and led to its share price decrease, the stock price has been under a lot of market pressure. The reason you clicked, I'm sure, was to find out if the all-wise Charlie Munger, the 90-year-old vice chairman of Berkshire Hathaway and a close friend of Warren Buffett, thinks the stock is ready for investors to buy or if waiting is necessary given the stock's perceived weakness. I bet you're curious about the company's future. Thus, please continue to watch, hit the like button, and subscribe. Tesla's shares, along with almost all other tech and growth stocks, recently surged much higher in that session as the CPI indicated that inflation was slowing down. The 7.3% increase in Tesla's shares was nearly as much as the Nasdaq's. However, the firm has not yet benefited from this gain because Tesla's impressive growth story and performance are overshadowed by Elon Musk's ongoing Twitter drama. In a recent interview with CNBC, billionaire investor Tesla received accolades for its quick expansion and outstanding accomplishments in the electric vehicle sector. Charlie Munger recently discussed his optimism over the company-wide Tesla and how he believes it surpasses expectations in an interview. Recently, Charlie Munger hailed Elon Musk's Tesla as a remarkable achievement for the U.S. auto sector. In spite of Munger's doubts, Tesla has grown to be among the most valuable businesses globally, with a market valuation of more than $600 billion as of January 2022. Tesla produced 1.91 million cars over that period. The carmaker produced 386,759 automobiles in the first 2 quarters of 2021 and delivered about the same number of vehicles, 340,300, in the third quarter of 2022. For the September quarter, the automaker's quarterly sales increased by 55.95% to $21.454 billion. Nearly $75 billion was made by Tesla during this time, a 59.8% increase over the same period the previous year. Elon Musk, the CEO of Tesla, has made important contributions to society, according to Munger. Since there hasn't been a successful new auto firm in a long time, Musk has stated publicly that Tesla's success in the auto market is a small miracle. Charlie Munger's record as an investor is impressive. However, the investor expert cautioned that the economy was in danger because some people lived in cold, miserable excesses and projected that the financial markets were in significant problems at the Daily Journal's annual conference earlier this year. Munger added that there was an overabundance of private equity, including venture capital. These excesses were also largely caused by the GameStop and Bitcoin markets at the time. The majority of consumers are finding that they are paying more on commodities than they were a year ago, he continued, adding that inflation is increasing at an alarming rate globally as prices continue to climb across a range of purchasing categories. The Fed increased its benchmark interest rate by 0.75 percentage points, marking the third consecutive large rise to 3.25% based on the 12-month percentage change in the Consumer Price Index as of October of this year. In a recent report about Tesla, investment company Morgan Stanley said that although Musk's ownership of Twitter would influence some customers' opinions, any ensuing decline in Tesla stock could provide investors a chance. Due to the Twitter controversy and other issues, Tesla's market value is currently less than $200. According to Morgan Stanley, investors trust in the company's ability to forecast the economic prospects for its core energy storage and electric car businesses, both of which are bolstered by a positive economic environment, is the primary reason for the high valuation of Tesla shares. According to the study, this is a widespread concern among many investors and has recently been tested, even though it may be tough to quantify any potential effects it may have on Tesla shares. In terms of vehicle production, delivery rates, earnings, sales, profit margins, and technology, Tesla has strong fundamentals. It is unclear whether the corporation will be able to achieve new heights, though, given its stock has been trading below $200 lately. In their research notes, Morgan Stanley raised the prospect that a poor public image of Tesla would affect demand for its goods. Despite its high level of vertical integration, Tesla nonetheless depends on a number of business alliances. The automaker's connections with government organizations and public backing may suffer, as may investor confidence and money availability, in order to industrialize renewable ecosystems and onshore battery development. Tesla requires tight collaboration with sovereign entities, mainly in the United States and China, even if it mostly depends on internal funding. To accomplish the growth anticipated by its $600 billion market capitalization, it will need to continue to have strong relationships with the investing community for the time being. The investment fund also offered a bear case for the $150 price of Tesla's stock. It was stated that Tesla would test our $150 bear case before the year is out due to possible severe sentiment concerns and slowing EV demand, especially in China. By cutting its production expenses, Tesla will seize any chance to lower the price of cars in the future. Morgan Stanley also thinks Tesla might keep lowering the cost of its vehicles. As Tesla's Giga Berlin starts to exceed output of 5,000 units per week, it said, its China team has started on the recent big price cuts in that market and anticipates price drops to follow in Europe. The re-architecting of the U.S. renewable supply chain at scale is ideally positioned to help a self-funded top-line grower like Tesla. Based on its 2025 forecast, Morgan Stanley estimates that Tesla's shares may trade at roughly 12.5 times EV per EBITDA, earnings before interest, taxes, depreciation, and amortization, and 23 times PE. Tesla is taking a sizable chunk of the quickly expanding EV market in terms of both market share and profitability. Having previously stated that the average cost of parts and assembly for Tesla's automobiles is approximately $36,000, the company is also looking for convenient ways to meet this demand. By contrast, it sells for at least $10,000. Recently, the manufacturer lowered the weekly waiting periods for all of its Model 3 and Model I cars to at least 1 week. For Tesla enthusiasts, this is fantastic news because wait times have seriously hurt sales. Demand for the company's EVs will rise as wait times are shortened. Tesla announced a $3.29 billion net profit in Q3 2022, despite Toyota producing 8 times as many cars as it did. This indicates that Tesla is not only leading the EV market, but is also steadily overtaking Toyota as the biggest automaker globally. How do you feel about Charlie Munger's Tesla claims? Stay tuned for additional developments and share your thoughts in the comments section. If you enjoy or find the video useful, click the like button. Kindly subscribe. See you in the upcoming video. Music.